Mr. Mark Selby, how are you, sir?
Very good, Mr. Matthew Gordon.
Well, it looks like you're on the road again. That seems to be a standard issue for you. Where are you today?
I am in Timmins. It's our monthly get-together, and have had some visitors. So, no, it's been a good couple days. So,
well, I'm sure we're going to share with them the news that we're going to talk about today, which is this Chinese stimulus, which seems to be washing over the market and is looking pretty exciting going forward. But let's start with nickel pricing and sort of understand what's going on out there at the moment.
Yep. Again, another week bouncing off the $18,000 ton mark at $820 a pound for those who use the other method. Again, it's held up reasonably well. I again still expect a test of the 17,500 level into that before this sort of down spike is over. We're seeing a steady increase in LME inventories. Again, nothing huge at this point, but 1 or 2,000 tons a week. We're still at a few days of inventory on the LME stockpile. So this was expected and nothing to get too concerned about. On the great convergence fronts that we've talked about many times. Again, the sulphate premium to briquette markets hanging in there. NPI also hanging at similar levels. We saw ore prices come off a little bit. They needed to. I mean, they had moved pretty dramatically on Indonesia, kind of looking at mining quotas. But according to some of the reports, there's still ore heading from the Philippines to Indonesia. The key thing that is, we're a few months away from when the Philippines enters the rainy season and ore shipments stop. So from certain parts of the country, so will be some potentially interesting developments on that front to see sort of whether everyone has got all the ore inventory they need to get through that period, or whether people are going to start scrambling over the next month or two. We'll see here, which again, sort of ties into your opening there around, Chinese stimulus. The big thing here is, again, we've seen disinflation, almost deflation sort of pop up into different sectors of the market in just within China. We could use a little deflation in the rest of the world right now. And so, the Chinese government, some of their traditional tools really haven't worked as well as they have historically. And so, the key piece here is it looks like they're pulling out the big bazooka in terms of fiscal stimulus. So they announced just overnight, $1 trillion in RMB in long-term construction bonds. Half have to be spent in Q4, and the other half in the first half of 2024. A key piece here is they're saying it's for infrastructure. Again, you want to stimulate the economy, but you don't necessarily want to create bad inflation. And so the key piece here is that it can't be used for productive capacity, which means like no more steel plants, no more aluminum plants. We're trying to get rid of the excess capacity out of the system. And so more infrastructure spending, is a very good way to do that. And they're going to let the fiscal deficit pop up above the 3% mark, which again, in this type of environment where they are, it's the right thing to do economically. And there's supposed to be a national finance conference, which will take place early next week. So again, I think expect further permanent pronouncements there and an underscoring of the Chinese government's, that they do not want to see this kind of disinflation, deflationary trends to continue. Again, that it won't as much in the past 20 years ago trickle into the commodity sector, but it will be positive for commodities in general, because again, a lot of that infrastructure spend will be more commodities intensive, and so net is a strong is a good signal to the market that things will improve, and we'll just have to watch to see how this actually flows through the various metrics, and to see whether it shows up in physical demand over the next 4 to 8 weeks.
So obviously exciting news out of China, and we should talk about perhaps what the knock-on effects are. But I think this won't be in isolation. It kind of feels like you've got a lot of announcements out of a lot of countries at the moment who are trying to look at ways of reducing real debt burden. So we can expect to see, I suspect, more of this, but across the board. But obviously, China being the second largest economy in the world, what do you think the impact of this announcement's going to be? What does it signal for industry? What does it signal for the markets?
Well, two parts. One is, again, if you've been sort of destocking and thinking prices are going to go lower, I think that the combination of, this Chinese stimulus announcement, we want to kind of put a floor under the economy here. And again, we'll see what comes out next week, combined with the fact that, a lot of the Western economies are getting to the top, to the end of their interest rate hiking cycle. I think that, sets the stage for, okay, if I've been short metals, maybe I need to start to cover because most of the bad news is now priced in and my risk is more upside than downside at this point in time. So even before we see the physical manifestation in the market, we may see traders basically getting out ahead of it. So I think it'll be an interesting, 2 weeks here to see what happens in the marketplace. But it is these kinds of things that sometimes cause a turning point in the market, and all of a sudden, after you've been on the downslope for quite a while, it's these events that trigger a bottom and a move higher. So fingers crossed, and we'll know more, probably in about 2 weeks from now.
Okay, well, maybe let's come back to that, because I say the data is going to be fascinating, because it has real implications, obviously, not just on price, but in terms of investment as well in the space. So now I want to talk to you about something else, which is the way that future demand is measured. We certainly, when we're looking at EVs, we tend to use the number of car units sold or estimated to be sold. We've also, in the backdrop of that, having conversations around different, standards of batteries, different battery types, and different battery use cases. So you've kind of been doing a little bit of work around, that, I think, haven't you? So, I mean, what do you want to tell us today about that?
Yeah, so the kind of mad at myself that haven't sort of been talking about it this way, because this is exactly the right way to talk about it. The last while here been talking about the fact that we're moving into a more nickel intensive phase of EV battery development as we move to North America with bigger cars that need to have nickel batteries in there. And so there's a company, Adamas Intelligence, that has been for quite a while, and shame on me for not getting sooner. Basically, been looking at the megawatt battery share. So, which is the better way to look at it, and starts to correct for that. Because the reality is right now, if you just look at the number of cars, and this is the issue that I've been was having and trying to talk to people about is, right now, if you have one little tiny micro car in China and you have a Ford F-150 Explorer pickup truck in North America, that counts as one when you do it per car. But that little micro car might have a 20 kilowatt or 30 kilowatt battery that, yes, is LFP, makes total sense, not driving very far. It's exactly the right size battery to get. That Ford Explorer, it has 130 kilowatt battery option. So that one truck counts for 6 of the Chinese cars, if you look at it, on that kind, on a megawatt battery size basis. And so, when you look at it that way, what's interesting is, and that, data is reflecting the trend that, can see underneath the numbers is, when you look at the average amount of nickel per kilowatt or per megawatt installed, that's now gone up over 8% year over year in the battery side, and it's gone up 11% in the plug-in hybrid. Again, in a plug-in hybrid, you also have a battery that's there. So you take that growth per unit, and then you multiply it by the number of units, the growth in the number of units, and you go, oh, okay. There's so much news about LFP and people getting nervous about, people are never going to use nickel in batteries, blah, 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 blah. But again, the reality is, now moving forward, it's not about nearly as much about China and Europe. Smaller cars, LFP is 100% appropriate. We're now moving into the big car, higher end market where you've got lots of models now coming out. And those are all going to be big nickel batteries, for the most part. And so, it will be interesting to see sort of how this flows through into nickel demand in 2024, 2025. But this is something that I'll continue to talk about, as we move forward here, because I think it captures what's going on in the market very nicely. So
that's two quite significant new ways of maybe looking at or analyzing the market. One, obviously, with the China news, and I suspect other news where government's taking real action in terms of reducing real debt burden, and this way of measuring the kind of EV contribution to to the mix as well. So we'll stay on top of both of those things going forward. We can't have a session like this without mentioning the LME. What's happening over there?
Yeah, so as we talked about and had predicted, once we got through 20,000, we were going to see prices move pretty quickly, and they did. And there's a very good reason, that they did. I hadn't realized just how big the short positions had gotten. So the net short right now is a record back to 2018. And again, during that time frame, we saw prices go down to the $4 to $5 a pound level. So it's amazing that the price has held up as much as it has. And in terms of tonnage, that's going back to almost close to an all-time high in 2019. The key piece here is, right, that those that's already in the market. That's priced into the market today. Again, I think we'll see one more break below $18,000 a level. But, going back to the Chinese stimulus, going back to the, interest rate cycle, getting to the end, once that risk return, dynamic starts to shift to there's more upside risk than downside risk. When you have a massive short position like this, the potential for a short covering rally, one of those rip your face off, prices move $2,000 a ton in a week or 2 week period, that's setting the stage for that early this year. So, it'll be curious to see sort of how this resolves itself. Again, we got one more move lower. We're not out of the woods yet, but I think once we get past that one move lower, I think that, unless there's a massive collapse, which I don't think there will be, then you'll see that short position start to be covered. And, I think will make for a very, very interesting early 2024.
Right. Well, there we go. So the joy of following these price movements and more importantly, the reasons why. Right. Well, bit of company news. Again, some people we talk about regularly. Talon Metals, how are they doing?
Great. Kudos to them. I mean, this is every junior miner you talk to is telling you that this is one of the worst markets. In my view, this is the worst that we've seen other than the late 2015, early 2016 bottom. And kudos to them, outraising $22 million to continue exploring Tamarack. And so, again, good to see, good companies out there raising some cash. SPC, who we talked about last week, they completed their resource drilling phase. And again, this is 2 properties. They picked us the adjacent part of it up from Vale. And good for them to getting a deal done with Vale, which is never easy. And so they've completed the infill. They're going to have a resource. This is a potential open pittable deposit, sitting in the Sudbury Basin where you've got 2 mills that are short of feed. And so they've done some additional infill drilling, at very shallow levels. So, again, good to see, 59 meters of 0.7 nickel, 0.38, starting at 2 meters from surface, so then, that again is very mineable, open pit material. So, will be good to see what the resource looks like and, eventually a PEA on that. So
all good. And then should we nip over to the US?
Yeah.
They're finding nickel too.
Yeah. So the key thing with the US, there really are very few places to find nickel. It's basically in the Minnesota, Michigan area, which is where Talon is. You've got some laterite deposits in the west coast of the US, and there's a nickel sulfide company that's made some discoveries in Wyoming. But the other place where you can find it is Alaska. So there's a company, newly named company, Alaska Energy Battery Metals. They've picked up property that was explored by ECO back in the 1990s. And so, again, a big, big structure, getting the kind of, big ultramafic type grades, but with sort of, a decent mix of palladium, platinum, along with the nickel and a little bit of copper. So, again, the first few holes, similar widths and grades to what had been done historically. So, we'll see, as they start to unlock what's going on there, you see if they can pull something together. Again, there's so much U.S. financial support right now for critical minerals that, if any of those plays should be able to get some traction. So this is one just to keep an eye on to see how it evolves going forward.
Fantastic. Okay, well there we go. A little bit of company news. Also, I'm not sure most people spotted this, but you've been seen trotting around with the Minister for Industry, Mr. Vic Fideli. What was that about?
Yeah, no, again, we've got an excellent relationship with all the various government ministers, and you've got a good relationship with the government ministers is when you're talking to the battery supply chain companies, and they said, oh, your ministers were here, and we heard about you from them, and so it was great to give. Obviously, with the feasibility study we put out last week, we're going around having those visits, and he's the key keeper of the mine to EV strategy in Ontario. One of a handful of ministers who are responsible for making that all happen. So it was great to sit down with him and give him an update. And again, very lucky to be in Ontario, where we've got a great provincial and great federal government that are being very supportive of those activities. So yeah, I know it was great for him to be out there supporting us as well. So
good stuff. Okay, well, look, Mark, appreciate your time. I know you've got to get over to the team and catch up with them, and we will see you next week, sir.
Sounds great.